Hello everyone, today I'm going to introduce you the order book, a trading tool that is relatively unknown in Europe and much more known in the United States. This tool is very effective, especially for scalpers. In this video, I will introduce you the basics of the order book. We will cover each concept but in a simplified manner. If you wish to go further, you can find resources on my website to learn the order book much more in depth. So let's start right away. You probably know the horizontal representation of price, as you can see here, with classic Japanese candlestick. Green candlestick represent an ascending candle and red candlestick a descending candle. Here the time unit is 1 minute, so each candle represents 1 minute. The price is displayed on the vertical axis and time on horizontal axis. This is the same representation but for a higher time unit. Here it is the 1 hour, so each candle will represent 1 hour. These charts are the most well-known and used in the trading world. If you look on YouTube or Twitter, for example, you usually see this kind of chart in trading. But there is another way to display the price. So what is it? This display is the vertical display, as we can find here in the order book. Here the price is displayed vertically, so you can find the column here. It is this one, actually here. It's the same. The current price is at 4,397, and here the current price is at 4,397. So the first important thing you might notice is that there is no notion of time unit anymore. You can't set an order book to 1 second, 1 minute, or 1 hour, for example, because we are going to talk about ticks. Ticks are the time unit generally used by scalpers, and on the order book, a tick will represent 1 square. So for this example, I took the S&P 500 future market from the CME, and on this symbol, we can see that each increment is of 0.25. So every tick is represented by 1 square, and when we move up, we increase by 0.25. And when we go down, we decrease by 0.25. You can see that as time goes on, the price will no longer move horizontally as on the chart with Japanese candlestick, but we will see it only move from down to up. So what is exactly is the order book? It's like a big zoom that will allow us to dissect a Japanese candlestick. No matter the time of the day when we look at an order book, we will always have the same vision of course, with different numbers that we will see just after. So let's review each element of this order book. So the first one is the most important, is maybe the price, represented by the white square. It's the current price of the symbol. Here I'm filming this video in the morning, so the American market is not yet open. We can see that the price moves quite slowly. But on some market like the Nasdaq, the price will move much more rapidly. Here you can see 2 columns, the buy column and the sell column. So roughly we can say that the buy column is all the buyers and the sell column is all the sellers. For example, at 3,396, we can see that were 49 buyers. There were, now they are 54. And at 4,399, there are 47 sellers. So what do I mean by seller and buyer? In fact, it is the pending limit orders. So to explain this notion of limit order, I will return to the other chart. Here we are in the virtual platform on a simulated account, and here you can see the order passing window, and there are 2 types of orders. There are limit orders and market orders. Here are the market orders and there are the limit orders. So these are 2 quite different types of order, and to explain briefly, market orders are aggressive orders while limit orders are passive orders. If I wish to sell at the price of 4,399, with a market order, I click on Sell Market, and you can see my order is directly executed in the market. So there I have a position that is opened directly at the price of 4,399.25. And on the other hand, if I want to place a limit order, so it's a pending order, it means we can choose a price level. Let's take, for example, 4,300, and we will be able to have a build or sell order at this level. So it's the 4 squares here. It means we'll tell the platform we would like to buy this level, for example, at 4,300, and only when the price comes to this level, the order will be executed. We can see this mechanism of limit order easily on the order book. So we are back on the book, and for example, if I want to buy the price at 4,399, we go on the buyer's column because I want to buy, and I click on the square, and we have a pending order at 4,395. It means I'm not yet in the market. My order is not executed, and of course I can remove my order if I want without paying anything. There are no commission, and the only condition for me to be executed is that the price that is currently here goes down here to hit my pending order. And on the contrary, if I want to sell with a limit order at 4,300, I can click here, and there my sell order is placed. So it's a very important notion, the difference between market order and limit order. That's why when we are going to use the order book, we are going to mostly use limit orders. There are also multiple advantages to use limit orders in scalping. Here you can see that the price came to hit the 4,300, and my order here was executed, my sell order. So here is the amount in dollar of the order. As I placed a sell order, if the price goes up, I will have a loss, and if the price is below, my position is winning. And there I can close my position, for example. To recap, these are all the buy or pending orders, and they are the sell pending orders, the limit orders. And you can notice that I displayed only the first 10 levels of market depth and not the other additional levels. For example, below we can't see how many buy orders are waiting. This is a personal choice, but it can of course be configured in the platform. Another important point for limit orders is that you can see that at certain levels they are much larger orders, like on this line at 4,395.25 just went up, and here are 113 buyer orders, while we have an average of 40 to 50 orders. Same thing here, we can see there are 2 lines here and here where there are slightly more orders. So with this representation of the thickness of the squares, we can see right away where there are more sellers and buyers. So we'll move on the other elements of the order book. We'll see these 2 columns just here. So this is the inside print. These columns will represent the orders that are actually executed in the market. Remember earlier where I showed you, I explained the difference between limit order and market orders. So limit orders are pending orders to be executed, and market orders are orders that are actually executing in the market. So the inside print will represent all the orders executed. So you can see there are 2 columns. The column on the left are the sell orders, and the column on the right is the buy orders. So concretely, if we take this price level, we can see it scrolls very quickly, since every second there are dozens of orders that are executed. But again, as it is the morning, we can see quite easily. So there are 3 buyers orders that have just been executed. Each time you see a new number appears, it's a new trade that was executed with different contracts, of course. For example, if a person sells 100 contracts at this level, we will see the number 100 here. So to go a bit further, if I choose to put 2 buyer contracts here, there, if I put them, if I was on the ready market, we would really see the 2 orders waiting in this column. So the 40 would have changed to 42. But as I am in a simulated account, we don't see the orders. And so these are the waiting orders. And once the price comes to this level, I will have 2 buy orders. And here 2 limit orders that will become 2 market orders. And these 2 market orders will see them appear here. So we will see the number 2. You can notice here in this column that there are orders that have remained, so that will be the orders that were executed in the past. We can see that in the past there were 23 buyers orders that were executed at 4,396.75. So for those who know, would be a bit the equivalent of the footprint. But what is interesting with the order book is that the platform will automatically refresh these numbers to have the most recent view possible. Here I think I had configured every 1.5 seconds so that the platform automatically refreshes the numbers. So you shouldn't choose a 2 big numbers, because the goal is to still have a quite recent vision of all the orders executed in the past, and it allows us to still show the imbalances, but it's a bit more technical and we will not see that today. So I think I have said everything about the inside print, and I forgot another very important notion. It's the spread. So it will be the difference between the bid here, so the buyer column, and the ask here, the seller column. Here we are on a very liquid market. That is to say, there are a lot of pending orders, so it's easy to get executed. So the spread is relatively low. It's quite difficult to see, but for example, when there is a gap between this column there and this column there will be a tick of spread. I will try to show you that on other market. So we are on the Nasdaq, and you can see it's much more faster. We'll see a little bit the spread. You can see that there is a gap between the bid and the ask. It's quite difficult to see, but you will use it. So we are back on this order book. Now we have to see these columns. So it's the pulling and stacking orders. It will represent the pending orders that have been added or removed. As I told you, for the limit order, we can add, for example, 5 contracts at this level, and we can also perfectly remove them without paying any commission. And of course, without being executed in the market, since the price has not arrived at this level. So these columns will represent at each price the number of contracts that have been added or removed. Here at 4,394, we can see there are 15 buyers that have been removed. Here at 4,300, there are 19 contracts that have been added. So it will allow us to quickly see where are the zones of interest. For example, if on a specific levels we can see a large quantity of contracts added, we can say that there may be an interest on this price level. So we'll continue with this column on the left that you must surely have noticed. It's the volume profile. It's quite simple. It will represent at each price level the number of contracts executed in the market since the beginning of the day. It's also configurable, but for me I choose to display a volume profile on the day. That is to say that every day it resets to 0 at the start of the day. all this bar will be removed, and depending on the evolution of the price during the day, these bars will take on more thickness and contracts will be added. So we can see at 4,300 there were 1,637 orders that were executed on this price level. So in this type of display, there is no distinction between sell orders and buy orders. It doesn't really matter. So on these 1,637 orders, we can know if they are buyers or sellers. We can't know if they are buyers or sellers. We can see that every time a contract is executed in the market, that means visible in the inside print, the number in the volume profile will increase by 1. And the more these numbers increase, the thicker the bar will be. So thanks to this volume profile, we will see another very important point, is that there it's the volume profile of the day to day, and we can see there are specific zones that are much thinner than others at this level. For example, there were only 43 orders executed, while here there were more than 3,000. So we'll not see today, but depending on the thickness of the volume profile, there are several meanings and several trading strategies to adopt. And finally, you can notice that there are different colors between the different levels. So the level here in orange, it's the POC, it's the point of control. It's the level where there were the most exchanges during the day. So it's like the price level where the number of contracts here in this example 3,618, and then there is a zone that is a bit darker here, between here and here, which are delimited by two zones here and there. So the upper zone, it's called the VAH, the value area high, and the lower zone is the VAR, the value area low, and these two zones will delimit the value area. So it's all the area we can see here, and it will represent the zone where 70% of the exchanges of the day took place. There we can see that the price is currently in its value area zone. And if the price would be here, for example, the price would have been out of this value area zone in the lower part. When the price comes here, we will see that it is rather in the high zone of the volume profile. And when the price comes at the bottom, it's when it is in the low part of the volume profile. And of course, the zones where there is nothing, like here, it's the zone that have not been visited by the price during the day. So if later in the day, for example, the price continue to really go up quite strongly, we would see that these zones will take values and that the volume profile will extend by the top. So we have seen all the basic elements of the order book. So it's a tool that is widely used by scalpers. And of course, to take a trade, we can use different strategies and tools like other indicators such as market profile, footprint, the heat map, etc. We can use the order book alone to scalp. I already done it, but it's much more complicated. So I hope you liked the video, and if you have some questions, do not hesitate to write them in the comment section. So thank you and see you soon.